Hello and welcome to Business Incorporated live on Channels Television. Well, the midweek trading session is in full gear right now. Here's what's coming up in the next 55 minutes. South Africa's inflation slows to 3.8%, making rate cut bets look attractive. And Egypt cuts its 2040 renewable energy target down to 40%. Zimbabwe attracts $1.2 billion investments in its mining sector in the third quarter of 2024. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's happening with commodities. That's metals now. We see it's just hitting all-time highs at this point. It's hit another high today. It's factors including safe haven demand spurred by the U.S. election uncertainties and the Middle East war. We see all of that playing into this metal there, $2,739. Up a big 0.7%. So we're seeing gold getting all the love at this point. U.S. gold futures, $2,754, up 0.6%. Let's look at other metals now. Looks like they're not following what's happening with gold, with the likes of silver, palladium, and platinum. We can put that up. We see that those ones are not looking as attractive. That was earlier, but $34.72. That's for silver, platinum, $1,029. And we see palladium still holding above that $1,000 psychological level. Let's get a check on oil now. Oil prices are down after industry data showed U.S. crude inventory swelled more than expected. So we're still seeing the weakness we saw earlier this morning, $75.54 a barrel. That's for Brent, 0.7% down. A big drop also for the U.S. grade, $71.24 a barrel. So we know this is our biggest foreign exchange earner right now, but there's a lot of volatility happening in the market. But let's see if this continues and maybe we lose that $70 mark for both benchmarks. To other stories now, Nigerian banks are currently in the process of switching core banking applications, which is causing disruptions to customers. Experts say the banks should show more empathy to customers to alleviate the difficulties they experience. I spoke to one of them earlier today on Business Morning. Take a listen.
When you look at in the issue of cybersecurity, social engineering is a bigger risk from that whole cybersecurity suite of risk. Why? Because take for example, a bank is doing an upgrade or a bank has an issue. People are sending money to customers. It's not impacting on time. Fraudsters who send SMS and email to people and say, "Oh, you send money to somebody, he hasn't gotten there. Click this link to register your issue," and that would be a problem. Now, what could banks do to do this? It's a communication. Banks need to be open. Banks need to respect their customers. Banks need to be very clear on what the issues are and when they're coming back, right? If this is well done, it will happen. Now, during this time of upgrade, I've seen different banks handle this thing differently. Some banks, right, because I get to have accounts in almost every bank, based on the kind of work I do. Some banks were communicating clearly, okay, we are doing this, we are back, we are yet to come back. Some banks just kept mum, and you have no idea about what's happening. Now, when a bank doesn't speak to their customers, it's easy for bad actors to start speaking to their customers on their behalf.
I would say the ongoing 2024 annual meetings of the IMF and World Bank includes improving the use of renewables for energy in sub-Saharan Africa, an analytical corner focusing on this reviewed Nigeria's economic reforms and the potential to attract climate financing, which could boost renewable energy resources. Take a listen.
When those reforms are implemented, we see afterwards an increase actually in climate finance inflows. So definitely something that governments can do is implementing those reforms, enabling the environment so that this finance can flow in. But of course, we look at it, we find a 20% increase after a period of 4 years. So of course, this takes a bit of time to materialize, but this is a way to go.
Do different financing options vary in terms of their economic impacts? To answer this, we use an existing model that represents several regions of the global economy and their interlinkages with greenhouse gas emissions. We further refine the representation of sub-Saharan Africa and disaggregate it into several countries and regions to better capture its characteristics. Our results show that scaling up renewable energy production with investments financed entirely domestically increases annual GDP levels by 0.15% in sub-Saharan Africa relative to the scenario that reflects only existing policies. However, when investments are fully financed with external sources, the increase is 0.35%. Now that is more than twice the impact.
And in today's interconnected world, leaders face the challenge of navigating complex global markets, diverse cultures, and rapidly evolving technologies. But what can be done to succeed? What essential skills, mindset shift, and best practices are required for leaders to thrive in a global marketplace? Join us for this conversation is John Melo, is the founder, Dynamic Africa Community, and is joining me right here in the studio. Great to have you, John.
Yeah, good to be here.
Yeah, so definitely a lot happening in the world right now. And, one would say with central bankers, battling inflation, also high cost of living, and we're seeing some businesses not able to, match up and, stay afloat, in these kind of times when you have, high cost of credit and all of that. But at the end of the day, you still have to play, even if you're playing locally, you still have to set yourself up, for the global market space. So for you, what kind of mindset or what should such an individual be looking at this point or building, right now to be able to thrive, in these other parts of the world?
Okay, so what I'll say is first, it's basically about the mindset. Very important. So you must be able to conceive that global mentality, for you to be able to play at the global stage. Because the fact still remains that even if you're playing at the local level, having the mindset that there is a place aside from the local level, which is known as the global space, it involves another level of articulation, another mindset, another thinking, because for you to be able to transcend beyond the local level needs another shift in mentality, because the global space is not an ordinary, it's not a place where common man plays, it's not a place where ordinary individual plays, it's not a place, it's a place where we have different species, different kinds of people. So it needs another level of mentality for you to be able to operate at that level. So that's.
But how does something like cultural intelligence now? How does that play into, because you're used to what you're used to. At this point. So how do you get some of these ideas to help you play in the global space?
Yeah. So to me, it's very important because cultural intelligence is key, because so many persons in their verge to play at the global level, they defy the culture instead of exhaling or extolling the culture. You understand? So what I mean is that for them to play at the global level, the thing is imbibing another man's culture, which is basically what so many Africans do. So many Nigerians basically, they do. But to me, I believe for you to be able to take that which you do at the global level, then you must be culturally intelligent. You must understand what your own culture talks about before giving meaning to another man's culture. You understand? So the idea is for you to be able to take that which you do within your own space, within your geography, within your culture, within your ethnicity, to the global level. You must be able to be informed with that which you guys do within your own local level, then take it, spot it wise, So I usually tell people that for this to happen, then you must be able to create some kind of value blueprint, you understand, around your own culture, that you create a narrative that even when people outside your own cultural ethnicity, or people outside your own locality, that when they see it, they'll be able to give meaning to it because of the narrative you've been able to create around it. Now, when you check some of the things we've been able to incorporate within Africa, within Nigeria as a whole, you will notice that they've been able to create an idea, a narrative around all that they are bringing to us. You understand, such as, talk about their food, talk about their dressing, talk about everything they do. They've been able to create an idea that we now perceive it.
It seems like it's so easy for most of us in these parts to imbibe what's out there, and
because of the strong narrative they've been able to create outside there, which we are still finding it very difficult to create within our own scope. So these guys, they've studied what we call the brain game. They've studied it. So that is why whatever they come up with, they create that strong narrative, strong perception around it, and they begin to sell it out.
But I feel like one, area that's helping us to get our culture out there, for me, I feel like our music is really getting us out there, because I was in another country, recently, and I noticed that most of the songs that were played there were mostly Nigerian songs.
Yeah.
So it's looking like that's becoming one of our biggest exports right now.
Yes. On that aspect, very good, because our Nigerian musicians in Africa as a whole, they are really doing excellently well. But I think it shouldn't just be only the music, the entertainment industry. Yes, it should also cut across various industries, various aspects, which are very important. You understand? So because of this, because of the zeal and the passion for people to rise in every area, both in academics, both in entertainment, both in food, and so many other these things. So we've been able to create a program. That's what I'm talking about. What I do as a global evangelist, we've been able to create a program. So where we gather guys from various industries, both in the fashion industry, both in the entertainment industry, both in academics, to come and share ideas. Yes, that's what we do on a yearly basis. It's called a Dacians Conference. It's a global event whereby we gather guys from different areas, to come and share ideas. Because the thing is that it's just information that we need on how to thrive, on how to dominate the global space.
Right, and from where you're looking, and seeing that education, plays a critical role, in all of this. But we've had instances where we try to get certifications and degrees from abroad, so that you can actually, go out there and play in their environment, and also come back here and be valued. But now, when you see the exchange rates, it's not cheap.
Yeah, it's not
getting
cheap.
all of that education, abroad. So what would you say to that individual that's just out there, not able to afford, traveling abroad to go to school, and not even able to get the right education here?
Okay.
What's your advice to that kind of person?
So to me, I looking at the exchange, the cost for accessing education outside the country. If you can't cope with it, there are organizations that have been able to, that are providing scholarships, for people to, just to be part of, to get education outside the country. I think, was it last month that a friend of mine, she got this chief needs scholarship, to study, all expense paid outside the country in UK. So there are so many of them. What you just need to do is meet the guys that have been able to do it, have been able to access it, have been able to pass their essays, their tests, and everything. Put yourself there, get necessary documentation, necessary information. I think they'll definitely pick you. And you see yourself swimming in that area. And once you be able to cross that, the rest will be something easy for you.
And it's quite interesting. I saw a report from Henley and Partners recently, and they did talk about millionaires moving, from one country to another. So there's been a big migration of millionaires from some countries to other countries. They also mentioned country like Nigeria. So we see millionaires also migrating, to other countries. Yeah. So in this migration, what do you think you should arm yourself with, as a millionaire, looking to migrate?
Like migrating to do what?
To other countries.
Okay.
Yeah.
So many of them, I think, because the economy is no more, the economy in the country at the moment is no more giving again. It's not something that they can deal with, So that's why they're just looking for a place that they can thrive, because so many businesses are clashing, they are just closing up so many businesses. So I think, left to me, anywhere you think you're going to thrive, that's where you should just put your head into. If not, so many things are just happening. So I think those guys that are pulling out are people that they've looked in and out. Man, it's not going to work here in Nigeria. So let's just move it outside. So that's.
And we have some that go outside and find out it's even more difficult out there.
Yes. So I still tell people that it's not about going outside there. The most important thing is, are you a value-oriented person? So that when you go out there, you will still be able to do certain kind of things that you do that still attracts the money, attracts people to you. Because, an alligator here in Nigeria cannot be, or a crocodile here in Nigeria cannot be a crocodile. We will not change to an alligator in America. So it boils down to value. So you must be value-oriented for you to be able to thrive in any economy. And being value-oriented, you just need to arm yourself with the necessary skills needed in the global market. Necessary skills, which are very, very important. When I mean necessary skills that have universal appeal, skills that can appeal to both outside the country, anywhere in the world, and skills that can also appeal here. So you must be able to arm yourself with skills that are universally appealed. Yes.
All right.
So that's just
so there's so much to unpack there, and definitely I'm sure those looking to play in the global space would glean some information there. Thank you so much, John Melo, founder of Dynamic Africa Community.
Yes.
It was great having your perspective there.
Thank you.
All right, we'll take a break now. When we come back, we're going to head straight to the markets, find out what's playing out in the local bourse and global markets that we track. That's in a moment. Just stay with us. All right, let's head straight to the markets now. Let's get a check on what's happening in Africa. We'll see for the African continent, we'll see the NGX with a pullback right there, 0.01%. Marginal pullback in South Africa, 0.14% down. Then we see other markets we track in Africa. We see the Nairobi Stock Exchange, and that's Egypt in North Africa. Let's get a check on what's happening in other parts. But we're still seeing 98,000 points. That's for the NGX. Let's look at North Africa now. Let's see what's happening. NGX 30, 0.35%. The Nairobi Stock Exchange, 114 points maintained. That's for yesterday's close, 0.11%. So it's not looking so bad. There's a mixed picture right there on the African continent. But let's speak to Damilare Ashimi, who's a macro strategist at AfriInvest. Hello, Damilare.
And to all our viewers across the globe.
Yeah, fantastic. It's great to have you. So it's all about what's playing out in Washington right now with the IMF and the World Bank annual meetings. A lot of projections are coming out of that meeting. We see the IMF there forecasting Nigeria's economy to drop to the fourth largest in Africa. If we look at what they put up there, we see at the top. If you put that up for me with the projections there from IMF, if you look at the top there, we'll see a country like South Africa, that's $373 billion. That's the projection. Egypt is coming in second place, $348 billion. Algeria, beating Nigeria there, $267 billion. That's the projection. That's what IMF is forecasting with the GDP for this year. So definitely, we have a target of being a $1 trillion economy, Damilare. How are you seeing these projections by the IMF?
Well, I think the projection in terms of what Nigeria's GDP number would read at the end of the year is a reflection of the dynamics that have played out in the Nigerian economy over the last 16, 17 months, which, if you look at it, it's actually not very bad that we are implementing reforms. But what is then missing is the fact that there are some complementary measures that should have come with the reform, which will have saved the economy the economic sides from collapsing like this. Looking back just 2 years ago in 2022, Nigeria GDP size in dollar terms was in the range of about $480 billion. And just within the space of 1 year, we've lost more than half of that, thanks to the massive devaluation of the FX rate. You recall that last year, before the new administration came in and began its reform, the exchange rate was in the region of 480 and so on. But just because of the devaluation that occurred last year, I think the exchange rate, the official rate ended the year around 907. That alone took the GDP by half. Now, like I said, it is not because the reform agenda is not good, but again, it's because some of the measures that should have come with the reform, for instance, at a time when an economy is going through a major reform like that of liberalizing the FX market, removing energy subsidies, there are also supposed to be provisions for cushioning strategies or cushioning programs that would then ensure that the purchasing power of household, ability of household to consume does not drop radically. And because these measures were not put in place, perhaps because we also lack structure that can evenly distribute resources, because most times you hear the government come up with cases of palliative, sharing rights, sharing this. But in the reality, most of these, first, those are not the kind of palliative the country needs to keep people's purchasing power up. Even with that, the sharing pattern of those ones are also not ideal. So by and large, the GDP number the IMF is forecasting to us is not really very surprising. I mean, we have issued a number of reports between the beginning of the year and now to explain why we think that we might actually have an extended period of challenge in terms of resuscitating the economy. So this is more of a reflection of what has happened to the exchange rate. Between May last year and now, the exchange rate has lost about 80% from about 481 to $1 to currently 1,601 to $1. So that is massive, and that will tell on GDP. And when you then look at the prospect for growth, the prospect for growth or the projection for growth too is not so very buoyant. At the beginning of the year, we have actually maintained that growth this year in a base case will not exceed 3%. I mean, when the IMF projected a 3.3% at the beginning of the year, we were very skeptical because we knew that perhaps what informed the IMF's projection then was the fact that we had a massive improvement in crude oil production in Canada to about 1.64 million barrels per day. But from our own perspective at AfroInvest, we're able to establish the fact that factors that can keep that oil production at that level were not put in place. I mean, we still have our oil asset being guarded by non-state actors. And again, so until we have measures that will reflect the readiness of the government to secure oil assets, such that no drop of oil, and every day we continue to hear that almost half of what we produce is being stolen. If you look at oil price globally since 2022, it should have been a favorable one for us. Our budget this year is benchmark at $72 or so. Even with the current pressure on oil, it's still at $75. So Nigeria should have been building its excess crude oil reserve, not depleting it. Now we have actually depleted something that was some years back in the region of
and it looks like, and it seems like nothing is
we need to fix.
It seems like nothing is being paid into the excess crude account, from all indications.
Because we don't have anything excess. We don't have, what should go to the account is excess above budget. So for instance, if the oil is benchmarked at $72 per barrel, and the projection is that at $72 per barrel, we also produce, currently this year now, our oil benchmark is $1.78 million barrel per day, which is what is in the budget. So as long as we are producing that baseline, and oil is trading at $72, whatever comes in will go into the Federation account for sharing. But the moment oil price inch high by $1 or 1 cent, excess of it will go to the excess crude account. Or in another way, even if oil is at $72, and we are producing more than 1.78 million barrels per day. So either volume goes up or price goes up. Whatever is above the budget level should then be going to the excess crude account. But over the last 7-8 years, we have not even met our budget benchmark for crude oil. The best we have done for crude oil in the last 7-8 years was very close to 2 million barrels per day, which largely is not, I think that should be around 2018. So which largely is not sufficient. And around that time, we're even close to 2 million barrels per day. Oil was trading very low, below $60. So by and large, this whole forecast by IMF is just the IMF now aligning to what some local investment banks or research entities like AfroInvest have actually put forward that, yes, we can get it right, but the structure to get it right, the political will to get it right, the institutions to drive reform appropriately. We have countries that go through reform. In fact, there is no country that will thrive on sustainable basis without putting things in proper shape, without having a reform, without having a institution running. But until we have those fixed, we will just be having a short-term relief, which might not last us for long.
But Damilare, looking at what's happening with fuel prices, what's happening with inflation, food inflation, and most of the cost of living crisis, it's safe to say that we shouldn't have floated the naira at all.
Well, I mean, you can argue for both sides of the subject, right? Like I said, the idea of floating, is it bad? Looking at what has happened to us. I mean, the reality is that the last 8 years, or the 8 years that came before this administration, Nigeria largely lived a fake life. Fake life in the sense that we borrowed, we depleted our reserves to keep the naira at the level it was. What should have been done those periods was to ramp up our productivity. The reality is that for any country with deficient productivity, or for any country that is not producing at least to a level of break-even point. For instance, I'll give example of certain commodities. Let me use rice for example. Data suggests that Nigerians consume almost 30 million metric tons of rice. But what we produce locally, even with Anchor Boro and all the other initiatives, is half of that. So that means we import half. And that half you are importing, you are depleting your reserves, you are making more people not to get jobs. So in the 8 years before this administration, we were depleting our reserves to defend things that we should have put our house in order to do. So yes, this administration coming with the agenda of reform is very good. But again, the reform itself was then implemented, right, partly not very efficiently. And that is why we are here. For instance, it will be very difficult for anybody to argue that the government should continue to pay subsidy. I mean, in the last 4 years before this administration came, at least for the official data, we spent more than 7 trillion on subsidy. That could have pushed education budgets up by twofold. That could have helped the health sector. But the reality is that because we don't have the institution to even ensure that these reforms are driven properly. So if we remove subsidy on fuel, the gains or the value, the revenue that have been accrued from removing that subsidy, how is it being used? So we're removing subsidy that is fairly benefiting all, and the gain, so to say, is not crystallizing for all to enjoy because it appears the gain or the savings are going to personal pocket. So these are the things that are wrong now that is making the reform to look as if it's a wrong step. Okay. But the reality is that it's not a wrong step because we can't continue to live a fake life.
Yeah, no fake life. Yeah, but, looking at this projection from the IMF now, what do you think can be done in the short term to turn this tide, from this forecast?
So whenever a forecast like this comes out, it should be a wake-up call for any serious nation to do things to beat it. It's not cast in stone. Right? At the beginning of the year, I said IMF forecasted 3.3% growth. They reviewed it downward in April. Now they are reviewing it downward. Why? They are beginning to see lacunas in some of the things we need to do. So we can actually beat this projection, even though we have just about 2.5 months to end the year. If some measures are put in place, for instance, one of the factors cited by the IMF for them to have revised down this growth outlook is the fact that our oil production has been dismal. The question is, if the government begin to show the correct political will to secure Nigerian oil assets and prevent large-scale theft that is ongoing both by, in quote, state and non-state actors, we can begin to see our production level hitting 1.6 million barrels per day at least from end of this month, and the remaining 3 months, it will impact. The reason why we're able to grow about 3.2% in Q1 is because oil sector grew significantly, and that, in fact, that was the quarter that the oil sector ended 13th consecutive quarterly contraction. So there are things that we can begin to do now that will impact the economy. The second thing they flagged is that our agri productivity is beginning to, and nobody should tell us that. Everybody is a living witness of that. The price you get in market changes every day, and it's to the upside. And they highlighted factors like the fact that flooding is affecting it, and also insecurity. We have been shouting insecurity in the agrarian community for years. The political will to end that has not been fully implemented. And we are now having issues of flooding. The last flooding we had in Maiduguri could have been prevented if the right step has been taken, because the dam that busted and escalated that flooding had actually been marked or been confirmed to need a sort of engineering work. But we didn't take the right action. So what I'm saying is that IMF can project, AfriInvest can project, any entity can project based on current variables and expectation. But if the right steps are taken, projection can be swayed. And that's why when you see most analysts forecasting, they tell you this is what happened in a base case, this is what happened in a best case, this is what happened in a worst case. And that's why even for the FX rate, you recall that JP Morgan said by the end of the year, FX should be about 1,200. But there are conditions to having that level. We do not do what ought to be done to achieve that level. And where are we now? 1,006 level. If we are not careful, if we continue to fritter the little we're earning, if fiscal prudence is not implemented, if policy that will help to ensure that local productivity is improved upon is not checked, the pressure will remain. Because why? The more you are not producing locally and you need to import more, the more the pressure on your reserve, and the more the pressure on your currency. Foreign investors' appetite, for instance, in terms of capital importation, are beginning to diminish. What we saw in the last quarter, yes, at about $2.2 billion, but when you look at the structure, FDI is not coming very strong. FPI too is weakening. The only component that is increasing is the borrowing. So meaning that foreign investors are only willing to borrow Nigerian money and not to come in here, and that is not very encouraging.
Definitely, that doesn't look
at a high cost.
Right.
So by and large, we can reshape our story. We can put Nigeria on the track that will beat IMF forecast. We have in the past, Nigeria economy has done far better than IMF forecast.
Okay.
But the box lie on our desk to do things right, to get things right.
I guess our operation beats the forecast at this point. But what are you seeing? Is this going to, shape investor sentiment in the market? Is this bearish, for the market, or maybe the market might just be indifferent?
Well, I don't think that the IMF revised projection will affect the market. Like I said, someone like AfriInvest at the beginning of the year have already been projecting 3%, and we gave our reason in most of our reports. So IMF is just coming to terms with what some of us have seen. Secondly, if you look at the dynamics of the market, right? For instance, let me give an example of year 2020. When COVID struck, the global economy contracted 3.5%, Nigeria economy contracted about 1.93% or so. That was the year Nigeria exchange emerged as the global best performing exchange, according to Bloomberg, with a return of 50%. What happened that year? Because of the pandemic and what have you, a lot of asset prices, fell drastically. For instance, a ticker like GT Bank stocks then fell to as low as 11 naira. So people came in and took advantage. Seplat was trading around 300 and something, Airtel around 400. So people came in. Now, looking at what is ahead of us, I don't think the IMF projection will really affect market. The IMF projection will only affect Nigerians and the citizens, because if the economy is not growing fast, if agri productivity is not growing fast, it is the citizens that will suffer, not really in the market. Because if you look at the market dynamics, now you look at the sector that are thriving. You look at the oil and gas. Like I mentioned, the oil and gas has been the best performing sector on the NGX, doing more than 118% year to date. What has helped the oil and gas is that some of the players in that space, especially those in the upstream, right, they are expanding their production, and at the same time, because oil is priced in dollar, so whenever they sell in dollar. The more the pressure on your naira, the more their return. And for those in the banking sector too, aside for the concern around the capitalization that hits them in Q2, you've seen that sector too coming up gradually, because these are sectors that are managing to sweat out their assets. Then if you then add that to fresh listing, last week we had Aradel listing, adding about 3 trillion to the market. So by and large, some of the sectors that you think are very strong to drive the market still have what I would describe as exogenous catalysts to shape them. So oil and gas, because of high energy price in the global market, the banking sector, because they can always push whatever pressure that is coming to them. So by and large, the market might likely deviate from whether we call the IMF projection a bearish one or not. The market will actually still keep to this positive trajectory. I don't see the equities market closing this year below 33%, which means that the market might be breaking even with inflation, because inflation too currently is at about 33%, and even with the current dynamic, we don't see it falling below 31% by itself, which then means the average for the year will be about 33%. So by and large, the market might likely break even with inflation dynamics. And we think that there won't be any major sell-off because the sectoral performance is already reflecting that. Those sectors that are heavily hit by FX and some of the inflationary dynamics, you are seeing their performance too not very buoyant, like the consumer goods part, like the brewery sector. Those that are heavily exposed to FX and that are slightly discretionary good. You are seeing the effect. So market have priced all this in, and we don't see any major change because of the IMF projection.
Right, and definitely we'll see if the all-share index can outperform inflation. But thank you so much, Damilare Shimi. It was great having your perspective today. Thank you so much.
Thank you for having me this afternoon.
All right, let's get a check on U.S. Futures. Now, we see it fell after the S&P 500 posted its first back-to-back loss since early September. So red, again, is a color just like this same time, yesterday, 0.31%, the Dow Jones Industrial Average. And the S&P Futures, that's marginally down 0.06%. The tech-heavy Nasdaq down 0.14% at 20,513 points. In after-hours action, McDonald's fell nearly 6%. The U.S. Center for Disease Control and Prevention said an E. coli outbreak tied the fast food giant's quarter-pounder burgers resulted in 10 hospitalizations and 1 death. And we saw Starbucks, that tumbled about 4% after the coffee chain issued preliminary quarterly results showing that its sales fell again. Let's look at what's happening. Let's see what happened with Asia there. But for Middle East, 0.03%. Dubai, for the Abu Dhabi index, 9,224 points, 0.24%. Saudi Arabia, down 0.68%. Big drop there. Qatari index, also down 0.63%. Let's take a look at Asia now. We see the Nikkei, 0.8%. 8% down. Kospi up 1.12%. Big moves there for the Hang Seng Index at 20,784 points, 1.39%. Other markets we track in Asia, we see the Shanghai Composite 0.52%, Nifty 50 0.29%. So it's largely a green picture. That's what we're seeing right there in Asia. All right, let's get a check on Europe now. We see foreign direct investments into Germany is falling, according to a new report by the country's central bank. Let's talk to Chiponda Chimbelu right there in Berlin. Great to have you, Chip. So can you tell us more about these trends?
Thanks for having me. Well, Laddie, direct investment into Germany has collapsed in recent years, according to the Bundesbank, which is, of course, Germany's central bank. And its data shows that foreign companies invested over 100 billion euros in equity capital in both 2020 and 2021. But by the middle of this year, only 62 billion euros had been invested. Now, the German central bank believes that this could be a signal of a turning point in the international division of labor. So basically, changes in terms of the places where the goods are produced. And that is something that was triggered by the COVID-19 pandemic and Russia's full-scale invasion of Ukraine in 2022. Now, the central bank says the two events could have permanently changed production patterns, and this may be what is directing foreign investment away from Germany.
What are the reasons behind the drop in direct investments?
Well, the reasons behind the decline in direct investment inflows to Germany since 2022 are yet to be identified. But the Bundesbank says that high energy prices may have played a role. And of course, also cyclical and structural factors could have contributed. Now, in addition to that, there's also growing competition for investment between countries. The US announced the Inflation Reduction Act in 2022, which aimed at encouraging investment in domestic energy production and promoting innovation in greener technologies. Now, many experts argue that the European Union has failed to come up with an adequate response, and that might be causing companies, including European firms, to relocate their production to the US, for instance. Of course, for the companies, it isn't just about benefiting from subsidies or tax incentives. Redirecting production is also a means to foolproof their businesses against any protectionist measures that might be taken in other markets. Now, as an export-dependent economy, Germany is also more vulnerable to some of the shifts that we are seeing in the global economy than other EU countries. So conflicts, geopolitical tensions, and China's downturn may continue to weigh on Europe's biggest economy.
All right, what are you seeing in the markets today?
Well, Laddie, European stocks are expected to be little changed today. Investors are reluctant to place any major bets ahead of a hotly contested U.S. election. And their focus will mostly be on the U.S. Fed's Beige Book, which is due to be released today. Now, that report will provide some insights into how the U.S. Central Bank views the current economic conditions. Investors will be looking for clues as to when to expect the next rate cut. Now, many analysts expect the Fed to be measured in its easing going forward. And in terms of economic data, Eurozone consumer confidence is due, and we will also get U.S. existing home sales later, of course. And in terms of company earnings reports today, we have Deutsche Bank, Tesla, and Boeing, which, of course, many will be looking at to see just how much of a beating the U.S. plane maker may have taken from the recent strike.
All right, thank you so much, Chip, for giving us the details of what's playing out right there in Europe. All right, let's look at some other stories now. See, South Africa's annual inflation rate fell below the 4% target for the first time in more than 3 years, bolstering the case for policymakers to continue cutting rates in South Africa. Consumer prices rose by 3.8% in September compared with 4.4% in the prior month. The drop in the rate to the lower end of the central bank's 3% to 6% target range, along with expectations that it may fall further, will likely persuade officials to cut the policy benchmark for the second time in a row. That's on November 21st. A favorable food harvest and soft fuel prices are factors that are expected to help inflation slow further. Forward rate agreements used to speculate on borrowing costs and pricing in a 92% chance of a 25 basis point cut. That's in November. So it's rate cutting season for most of these economies there, getting closer to their inflation target at this point. All right, let's get a check on what's happening in Egypt now. We see they revised their renewable energy target for 2040 down 40% from a previous goal of 58%. And that's according to the petroleum minister. He's underscoring that natural gas will remain a key part of the country's energy mix for years. Before hosting the COP27 climate summit in 2022, Egypt pledged to raise renewable energy production to 42% of its energy mix by 2035. Later advancing that target to 2030. In June 2024, then electricity minister set an ambitious plan to raise this to about 58% by 2040. But that target has been abandoned now. I will see Egypt's House of Representatives have approved a €3 million agreement with the European Union to support local vaccine and medicine manufacturing. The grant supports Egypt's plans to increase local production of medical products and ensure equitable access across Africa, aligning with the EU's Global Gateway and Global Health Strategy. The Minister of Planning and Economic Development and International Cooperation highlighted the long-standing partnership between Egypt and the EU, noting that these grants will significantly contribute to Egypt's development in key sectors. Moving on to Zimbabwe now. Zimbabwe has attracted investments worth $1.2 billion during the third quarter of 2024, with 168 new licenses issued to investors by the Zimbabwe Investment and Development Agency. And that's according to a new report. The mining sector continues to lead in drawing foreign capital, securing 74 of these licenses with a projected investment value of $579 million. This development underscores the success of the Second Republic's investor-friendly policies, which have fostered an environment conducive to business growth. Over the course of the year, Zimbabwe has seen a steady influx of multi-billion-dollar investments, signaling confidence in the country's economic reforms. Obviously, the government of China has announced plans to establish a bamboo training and plantation project in Uganda. According to the Chinese ambassador to Uganda, arrangements are being finalized to send experts in bamboo cultivation to facilitate the initiative. The initiative is a collaboration with BGI Group, a Chinese company specializing in genetics research, alongside the National Agricultural Research Organization right there in Uganda. All right, time to get a check on what's playing out in the crypto market now. Let's see the Color, what's the color right now? We know it's been major pullbacks and it's still majorly red right there on the screen, $66,594. That's for Bitcoin, 0.76% down. Ethereum losing that 2,700 level, 1.79% there. So it's red for most of the top 100 altcoins on coin market cap. Let's look at the sentiments now. What's that sentiment? What's it doing to how traders feel in the market? It was greed before, but now it's getting closer to neutral, but still quite a greedy market at 71 points. Let's look at the top headlines now. We see Tesla. Tesla still owns 11,509 Bitcoins. Yeah, that's Elon Musk's the company there is still owning, but not adding, but still owns about 11,000 Bitcoins. And that's despite recent surprise shuffle, and that's according to on-chain data. Then we see Michael Saylor is saying that he's going to give away his Bitcoin fortune. And he's going to do it the way Satoshi, that's the enigmatic Bitcoin inventor, did do it, when he invented Bitcoin. He intends to leave his Bitcoin wealth for the betterment of civilization after he is gone. Then breaking news right here in Nigeria, we see the Binance executive has been freed. The Nigerian government has dropped all charges. That's reports say the Nigerian government dropped all charges against Tigran Gambaryan, an executive at Binance Holdings who has been facing money laundering trial from detention since April. Let's bring in Rume Ofi now, financial market analyst, to bring us up to speed. Hello, Rume.
Good afternoon, Adi. Good afternoon.
Yeah, good afternoon, Rume. It's great to have you. So I guess we can all breathe now. The Binance executive, finally.
Exactly.
How's this being received by the crypto community?
Indeed, I must say that it's received with a lot of excitement because this has cost us a lot. A couple of platforms that want to do stuff here in Nigeria or have a value, or some of us add value to them, are having to stay back because of all of these things that are happening. And I'm very, very happy that we are actually right now seeing a new change where Tigran is granted freedom to visit his family. It's been very tough. In fact, just yesterday I had a meeting with a couple of persons and they're like, Nigeria, we are not coming. We don't have any interest there, but I think this is a step in the right direction, and I believe a whole lot of things are going to come into place. This has been long overdue. We have been pushing. He's been in detention for eight months, and it is not easy. A couple of congressmen in the US have actually called for his release, and I think the Nigerian government actually has listened to that, kind of behind the scene, kind of lobbying an agreement that has made all of this come to pass.
Right, quite incredible. You mentioned it's been 8 months. It actually, I didn't know it didn't feel that long, but wow. It's incredible. It's been 8 months already. But what do you think this will do to, Binance-Nigeria relationship?
All right. So the charges on Binance are still on. The charges relating to tax evasion and a couple of others, they are still on. But the truth is, Tigran is just a staff of the company. He's being held for the sins of the company. So maybe at a time where Binance is going to, as a company, is going to sit on the table to negotiate for all of things that the Nigerian government is holding them for. We're going to most likely have a rethink on how all of this is going to play out.
Right, and definitely we know right here in Nigeria, we've seen the SEC, issue licenses to some, indigenous cryptocurrency exchanges. Do you see, at some point, maybe Binance might be getting a license here, or one of these international cryptocurrency exchanges? They
said it earlier that they're not going to be applying for license, maybe because of all of these challenges that are going on. It's also good because personally, I would want a situation whereby the local exchange platforms are indigenous platforms in Nigeria and Africa flood the system before these big boys come in. So they're obviously going to come at some point. There's obviously going to be a negotiation at some point. Considering what happened in the US, you saw how there was a lot of negotiation about, CC had to go to jail, fines needs to be paid, and a couple of things. The DOJ looked into Binance books. So maybe in our own climes here, before some of these licenses are going to be issued, specifically for Binance, we're going to see some agreement, maybe people shifting grounds between the government and the platform, and also some fines are obviously going to be paid, because the truth is Binance has been operating in Nigeria without being legally registered.
Right, and looking at what's playing out in most of these markets, I'm guessing once you trade in a foreign cryptocurrency exchange, I want to believe that's importing at this point. But maybe when you make profit and bring that money back in to the country, then I guess that's where we get gains. But looking at this whole cryptocurrency exchange platforms, what kind of growth are you expecting for indigenous cryptocurrency exchanges in Nigeria, even with the new leadership with the SEC right here?
Yeah, so the entire industry, crypto, blockchain, and Web3 is quite big, but it's looking like a lot of persons are focusing on the exchange platforms right now, because a lot of attention is towards trading. There are platforms, Web3 platforms, gaming platforms, where people are actually providing value and building a career around. So, but for the exchange now, what I'm looking forward in the future, we'll see more growth amongst more users, more user base, more sign-ups, then more education, because some of these platforms are going to pioneer education. A couple of them are already doing that, have the license, are already doing that, or some were doing that before the license regime. We'll see more of that. We'll see more people getting inclined with the education around blockchain, cryptocurrencies, and also we will see an influx of people building more products around this industry. Also, I'm very sure that the financial institutions are going to also find interest. But the truth is, people like us, players like us, before now, are going to more like show them the way to do it as regards to our climb. Because the truth is, I believe one of the things that Binance, so to say, didn't do properly well was to understand what it means to do business here in Nigeria. But indigenous platforms understand, they are Nigerians, and they know how to find their way around all of this regulatory environment and who to meet to be able to do things properly and abide. So I'm looking at the growth. Nigeria has to come back to lead this entire industry, and in Africa and the rest of the world. Stablecoin usage is very high in Africa. Nigeria is leading as well, and a couple of other interests around Web3, blockchain, and cryptocurrency industry. So more users. You saw what happened with the tap thing. A couple of persons got into the industry. They're not even talking about Bitcoin here. They don't even know what blockchain is. They don't know what the anonymous innovator Satoshi Nakamoto is, but they believe that by just tapping, they're making something for themselves, and it makes everybody really happy.
Right, and I'm sure a couple of players are bracing, for some token generation events that are coming up. I know one is, I think X Empire is also coming. But for you, Ruma, is it dust you see coming, from now on for most of these these games?
So the truth is, kudos to the originators or the creators of all of these GameFi, game to earn, tap to earn, all of these things, because the major point for me is bringing people into the industry. Considering how naira to the dollar is, $1 now, it's off the roof. So if someone is making something tangible relating to the naira, it makes a whole lot of sense for them. So they are looking at it that way. Even if they are getting to some of this game, even if it look as if in the West, it's something that doesn't make sense. It makes sense to a lot of people that are jumping on this industry. So I'm looking at the situation whereby what does to me for those of us that are more inclined may not be does for some persons that are making a few buck for themselves to be able to survive in the long term. So I'm seeing it from that extent, but best days ahead, maybe we'll begin to see gameplay to end games that will be paying maybe Naira and making a whole lot of people happy. Maybe a game that where you tap, you get some meal in some of these restaurants or a couple of other things. Because I've been told to
maybe tap to eat.
Anywhere we see meal, we can jump on it.
All right, tap to eat. Thank you so much, Rome Ofi. It was great having your perspective there. Thank you so much.
Thank you, Laddie.
Yeah, so that's it. That's the show today. Thank you so much for watching. And we're going to bring you what the closing, for the markets, that's for the local boss. That's on the news at 10. We're going to find out how the market played out. Thank you for watching. I'm Laddie Williams. Bye-bye.